Welcome to the Passive Mobile Home Park Investing Podcast with your host, Andrew Keel. This is the podcast where you can get the education you need to invest 100% passively in the highly profitable niche of mobile home parks.
Welcome to the Passive Mobile Home Park Investing Podcast. This is your host, Andrew Keel. And today we have a group of amazing guests in Mr. Brett Bowman and Ryan Hill from Suncrest Capital. Before we dive in, I want to ask a real quick favor. Would you mind taking an extra 30 seconds and heading over to iTunes to rate this podcast with 5 stars? This helps us get more listeners, and it means the absolute world to me. So thanks for making my day with that 5-star review of the show. All right, let's dive in. Suncrest Capital has over 600 lots currently under management, and they're growing fast with another 7 parks under contract. They have over $30 million in assets under management. Brett has been investing for over 12 years, acquiring 30 plus million in assets spanning single family rentals, multifamily, industrial, and mobile home communities. He has a background in high tech, where he managed multi-million-dollar budgets in hybrid corporate finance and large-scale program management roles. He is currently the chief investment officer at Suncrest Capital. Ryan Hill has over 13 years experience as a real estate agent, directly involved in over $41 million in sales transactions. Ryan is a mobile home park owner and operator and is responsible for driving the operational efficiency at each community. Ryan is currently the chief operating officer at Suncrest Capital. Thank you guys for coming on the show. We're excited to have you.
Thanks, Kyle. We're excited too.
Yeah. Maybe I'll start with you, Brett. Maybe you can tell us the story of how you guys got together and got into manufactured housing communities.
Sure. Yeah, this will be fun. Ryan usually gets to tell the story, so I'll jump in here. So yeah, like you said in my bio, I've been doing real estate for a while. I started doing syndications about 2-3 years ago in multifamily primarily, and they got into industrial. The way I got involved in that is I worked with a lot of really big operators and kind of came in as a junior general partner with them, got tons of mentorship across several groups, several asset classes. I primarily did a lot of the underwriting, acquisition work, project management up front. So got to learn that super well inside and out. Meanwhile, Ryan on the side had already been buying mobile home parks, and he was primarily investing in Kansas City area, which is where most of my assets were as well. And we both live in the same neighborhood here in the Boise, Idaho area. So basically, we met through a third-person acquaintance that actually partnered with us on our first mobile home park. And I think, Ryan, why don't you take it from here? Because this is kind of your part of the story.
Yeah. So my son is a budding entrepreneur. So he has a lawnmower business. And the acquaintance that Brett was talking about was one of my son's clients. And I had just returned from a trip from that first mobile home park my wife and I purchased about 3 years ago. And when I told him about it, he got excited to hear about it and wanted to learn more and said, "Hey, I had this friend, Brett, we were just talking about mobile home parks last week." And so we all connected and met, and I had a off-market deal just a half mile or so down the street from that first mobile home park I bought, just south of Kansas City. And so the three of us went in on it together and bought that one.
Wow, that is fantastic. Ryan, how old is your son?
He is 15 now. Yeah.
15. Wow. That's who we need to be talking to, man. He's the future entrepreneur.
Yeah.
Yeah. My favorite part is when I pay him for mowing my lawn, most of his money goes straight to buying stock. So.
Wow.
Yeah.
Wow.
Giving up for his first mobile home park, right, Ryan?
Yeah.
That is fantastic. So Ryan, your background is in residential real estate. Is that right?
I was a residential real estate agent for 13 years in Washington State before my family and I moved over to Idaho. I really didn't feel like rebuilding from scratch a new client base. So I'd been educating myself on the mobile home park space for a couple of years, reaching out to other owner operators, just researching hundreds of deals, really, like Crexy, LoopNet, et cetera. And then I found a diamond in the rough for that first one that had some nice owner financing on it. Just refinanced out of it a few months ago. So essentially full cycle on that very first one, which was great. So haven't looked back at the mobile home space, and now we're dabbling in retail as well. but we love it. We love the opportunities for not only ourselves, but our investors too.
Yeah. And Ryan, when did you buy that first mobile home park?
So that was 2019. So July 2019.
Okay.
So
Wow.
yeah. And I think it's important to know that like Brett and I both have full-time day jobs. Mine is coming to an end here at the end of this school year. I'm an elementary school principal. So we've grown so fast that we're able to afford me going full-time right now, and Brett hopefully in the near future, but we've been able to hire employees as well in the last few months, which has helped us quite a bit.
Very cool. Wow. I'm curious what things from the elementary school principal role carry over into the management of the operations of mobile home parks, if you don't mind touching on that
I think
briefly.
Systems just becoming adapted, creating efficient systems and leveraging the talents of other people to achieve your goal. So that's similar in education with teachers and staff and helping students learn the best they can. And it translates well over to mobile home park space, where in order to operate efficiently and to grow as fast as we have, we've put a lot of time and effort into just making sure our systems are smooth and taking care of expensive lessons that we've learned the hard way, and so that we're not making those expensive lessons into the future.
Yeah, maybe you could tell us about some of those expensive lessons and maybe some mistakes you guys have made, in the mobile home park business that maybe our listeners can learn from.
I'll turn that one over to Brett. He's got a few examples.
Man, where to start? I would say, I don't know if it's the most expensive lessons, but in my mind, the most painful lessons are usually people related, in the sense that, hiring the wrong person, having the right person maybe do the wrong job, for example. So we recently had somebody that we were counting on for our, we have one bookkeeper that's overseas, but then we had an onshore person that was kind of overseeing the bookkeeping and accounting that had just decades of experience, was just like super knowledgeable in this space. And turned out after paying hours and hours and hours of work to this individual, they really weren't doing much. And so we were in a world of hurt when it came to time to prep our taxes, so that's one of those things that just staying on top of every aspect. One of the things that we've been implementing in the last few months, we read this book called Traction by Gino Wickman. Highly recommended if you haven't read it before. But it's all about creating systems really for startups. I think it's largely meant for startups, but how to create scorecards for make sure you're watching the right data, set the right goals for the year, the quarter, at the individual level, company level, and how to run even efficient meetings. And here I've been in, Fortune 100 companies my entire career for 15 years now, doing corporate finance, cross-functional project management roles. I've been in thousands of meetings. And so learning how to run a meeting differently was good for me, but that has helped us, I think, tune in and make sure we're focusing on the right thing, because you can't be in every single detail of the business. But if you've got the right data and you can see the trends, and you've got the right leading indicators, and you can ensure you've got the right people, I think that really helps you avoid some of those painful lessons.
Totally agree. And Brett, maybe you can share a little bit about your background a little bit more, and how you got into mobile home park investing and real estate from the tech background.
Sure. Yeah. So I just quickly, I think this probably relates to a lot of people. Just early teenager, probably 12 years old. I'm in a 7th grade class, and our history teacher of all people was talking to us about time value of money. And he would take a pencil and draw on the walls in the room. And I just thought he was the coolest teacher, right? But it really stuck with me because he was drawing out these charts that if you invest $10 a month for the next 10 years, this is what it's going to grow to, right? And I really caught it. And so I just really loved the finance world. So that's when I went to finance undergrad, MBA with focus in finance. But all along, was reading the books like Rich Dad, Poor Dad, Cash Flow Quadrant, things like that, okay, stock market investing is pretty great, but it's not going to scale as fast as I want to. And then even learning into, I started with single family rentals and did a few of those and was realizing, okay, this isn't going to scale either, because you need a new loan for every one of these. And you only have so much equity that you're building up per home. And there's only so much cash flow per home. So that's when I discovered the world of commercial investing and syndications and being able to, honestly, as an LP, that's where I first got started, was an LP and junior GP. I was getting better returns on my investments that had zero work than I was on my single family rentals. So it was crazy, just mind blowing to see how that works. So that took me into the commercial space. At least Ryan had to convince me a tad about the mobile home park space. But once I started learning the unique upsides and strategies you can do with mobile home parks, it wasn't too hard of a sell.
Okay, fantastic. And you still have your day job, which is in tech and finance. And yeah, I mean, what characteristics do you think carry over from that into what you're doing now as the CIO, right? Chief Investment Officer of Suncrest?
Yeah. So obviously a lot of the finance background that I've got helps a ton, because I do a lot of the financial modeling and forecasting, and then also analyze our current performance. But I also have done, just over my career, a lot of project management. So I've done Six Sigma Black Belt, if you're familiar with that. It's just like really hyper focused on specific types of project management. And that helps a lot when you've got turnaround projects that are the type, which I know you like to buy a lot of those value add projects too, that are a ton of work, and it's lots of moving pieces. And, when you've got even just one compounded by, we're at 13 parks now that we're working on. It's with 7 more, like you said, closing in the next couple of months. There's a lot to keep track of. So that's helped me. That's translated a ton over to the mobile home park space.
Love it. Ryan, maybe you could tell us a little about Suncrest, kind of what your strike zone is for mobile home parks and where you see the opportunity in the marketplace.
Yeah, we like the value adds, as Brett was alluding to. So 60 to 70% occupied, below market rents. We're looking in MSAs that a lot of people are. We like over 100,000 population, but we'll look at 50,000, and just depending on location of where it's at. Most of ours are in the Midwest right now, so we're creating a larger portfolio. Example in Springfield, so the 6 parks under contract right now will be added to 4 that we already have under ownership and operation there. So really helping compress cap rates on the sale of the overall portfolio. So the infill piece is, Brett likes to use the analogy of an apartment building, that you buy an apartment building, but it's hard to add floors to an apartment building. But in the mobile home park space with these vacant lots, it's a similar idea, that you're able to add like these additional units to a property that you're looking to improve. So those are the 2 main ways. The infill piece, which is it's a ton of work. There's a lot of moving parts. We feel like we're honing in on the strategies and the systems for that, to make it efficient and to fill faster, and ordering new homes and sourcing used homes, like quality used homes, having rehab crews. So kind of tackling that in a variety of different ways. We're not afraid of private utilities. So we have parks with sewer, with lagoons, with wells. And a lot of those we do try to convert over to city utilities. So as Brett was talking about with the project management piece, he's done a great job in taking leadership with those projects, which is a ton of work. Like to connect to city utilities that are running right outside your park, there's so much to it. And Brett's done a great job diving in with our engineers and the city teams and our general contractors on the ground, getting those things all organized so that we can improve those properties and compress cap rates for us and our investors too, which is super cool.
Yeah, no, definitely. Let's go back and talk about the infill, because we've had many guests on this show, and whenever I ask them, hey, what's the hardest value add component in mobile home parks, and they always say it's infill. And that's something that, again, it's not very complex, right? You need to find a home, you bring it in, you put it on a lot, you get the utilities hooked up, and you sell it or rent it out. But it's definitely not that easy, right? It takes a lot of elbow grease to really, make this happen. Maybe you can shed some light. I think before we started recording, you were saying that you have 100 infill lots in Iowa that you're working on infilling. And then you have approximately 50 infill lots in Missouri that you guys are working on infilling. So maybe tell me a little bit about that strategy. I mean, that has to be super challenging, given the current economic climate and the ability to get used homes and new homes. So what have you guys done to overcome that?
Yeah, so we have a number of strategies. So one is we have a team of VAs that they comb Facebook Marketplace and a radius around the markets that we're in, finding used homes. And we have a series of questions that they're doing the preliminary work with the owners of those homes. And then they hand it over to us to kind of finish the deal, so to speak. Really making sure that homes can be moved out of properties is important. We've gotten burnt on a couple of those where it probably could have been moved out, but we also didn't want to burn bridges with other owners and operators. So we ended up selling those homes back. So we discovered that little nuance is key. We do work with some wholesalers here and there that are looking at homes for the used homes. And then we just put in an order of 47 new legacy homes that will be delivered starting in about 6 months. So,
and tell me about that. Tell me about the 6 month, because I have an order right now with legacy, and they're not giving me those homes for 12 months. So, what type of magic did you pull off there?
We told them Andrew said we could go ahead of them. And
yeah. Andrew said, yeah, just jump the line.
Just give us Andrew's homes.
Yeah.
Joey will be getting a call.
Yeah. But it's, in this business, relationships are super important, just like really everywhere. But we were able to develop a relationship with the owner of Legacy and one of the board members as well. And so there is an option they give to some dealerships, and we have dealerships in all of the states that we operate in. So they hooked us up essentially with the option to pay a slight premium on each one of those homes to move up in line, so that we're able to get those new homes. Yeah.
We actually made the connection just really quickly with one of the sellers in Springfield knew the owner and board member for Legacy, and that's how we got the introduction through all that. So that worked out pretty well.
Very nice. Yeah. It talks about the power of networking. And you said it was just under $2,000 per home to expedite and save you 6 months, where otherwise you would have gotten these homes in the dead set of winter and you couldn't have done anything with them. Where now you're getting them early fall so you can get them occupied and you can not have to be stuck with, vacant homes sitting there or paying the gas bills on homes all winter. So Very smart on your guys' behalf. Very smart. So how did you guys get like the baseline knowledge? Maybe you could speak on this, Brett, of mobile home parks. Did you guys, how'd you get educated on it?
So Ryan had, I think, 2 years. Ryan, you were researching the space before you made your first buy in 2019. So since 2016, 2017, Ryan's been researching it. I started researching it at about 2019. I had the benefit of partnering with Ryan though. So I came in and knew a ton about the commercial real estate space and how to do like the legalities of syndications, raising money, operations, things like that. But having Ryan with the expertise and really great network already of other operators helped me a ton to get up to speed. So I would say, like, for me anyway, the way I've learned every asset class has been partnering with somebody who's done it before, whether as an LP or a junior GP, coming in and just like learning. And I think that's, in my mind, the best way to do it. I learn, I'm hands-on. I think as an LP, you can ask a ton of questions throughout, like for me, I love meeting with our investors and answering questions. And we have some that really like to get into the details. And those are some really fun conversations. And honestly, we get good feedback too with those conversations. So I think that's the best way to learn. Obviously, there's a ton of really great podcasts, including yours, that have great information too. And I mean, we're obsessive about all of them. We share links all the time to like specific episodes. So there's some great stuff out there for sure.
Definitely. Ryan, you were a little ahead of Brett. How did you get educated?
Yeah, I think initially it was just websites and some Google searches, but then I got connected with Ryan Naris, and he has his mobile home parks in real life podcast as he was just starting that. So I consider him a mentor, and I was probably one of his first mentees that I was able to call him and ask questions and find a deal, and he'd help me kind of analyze it. So finding a mentor in the space is really important. And then, as Brett alluded to, there's some really great podcasts out there. So I've listened to probably every single one of them, all the episodes, and we've reached out. I think the key is we've reached out to people after listening to some of those podcasts in different regards of the business, to build relationships and to gain insight on how we can improve our business. So that's been fun. And Brett and I really enjoy meeting with our investors or potential investors and answering those questions. I didn't realize that would be so enjoyable when I first started. But that's been really fun is to make those connections.
Very nice. So neither of you went to the MHU boot camp?
No.
That's one of the things that we've just kind of seen a recurring thing of a lot of operators attending that. But that's cool that you guys, use the more podcast route and networking route, which is great. Tell me, what has been the toughest hurdle for you guys thus far in mobile home park ownership?
We might answer that differently. For me, Ryan alluded to this. I would say the massive capital projects so you mentioned infill being one of the hardest parts. I feel like infill is easy compared to the private utility to public utility conversions. We have 3 of those in progress right now at 3 different communities. One community, we have all 3 utilities are getting converted: water, sewer, electric. And having been someone that's ran multi-year cross-functional projects, these are complicated. And they're complicated because you're working with several city like one of ours, for example, is just on the fringe. So it's technically not incorporated in the city, but water is a city utility, sewer is county, electric is city. And so you've got so many different departments. You've got fees you have to pay to each one of them, connections, inspections, permits. There's all these esoteric processes involved in it. It's complicated. I think now that I've done a couple of them, I know what to look out for, and I would know a little bit better what questions to ask up front. But learning something like that, and frankly, there's not a lot of people in the space that have done that before, so there really wasn't a whole lot of resources for me to go learn. So you have to kind of be the person that's okay asking dumb questions and feeling dumb, which I am totally okay being that person on some of these calls. So anyway, that's probably been the hardest thing for me.
Yeah, and I'd say on the infill side, there's so many dominoes that have to fall in order for it to get to the finish line, from the lot prep, from breakdown to your toter. So we've taken control of some of those efficiencies. I was just telling you, Andrew, before we started, we're actually moving our very first home with our very own toter today, which is very exciting. But in the past, you'd have to wait for availability of the transporter, and then things come up and it pushes the timeline. But making sure your lots are prepped and ready to go for that home, the sales process of the home, there's just so many moving pieces to that, start to finish, of getting a new tenant into a quality home. That's been challenging and taking a lot of time to figure that out.
That's a big undertaking. Yeah. That was one of our pain points too, is finding reliable third-party transporters that we could trust to show up on time and deliver the homes on time. So we started our own transport company as well. And it's cool to see that you guys are doing the same thing, because at a certain point you have enough scale where you're going to be moving enough homes and it just makes sense. So totally get it on that. So how many homes have you guys actually moved into communities and got set up and sold?
Well, the moving into communities is a higher number than the sold for sure right now, as we're working on the rehab. So we're over 24 homes or so we've transported in since this last fall is when we started in earnest on that project. So we've sold about 3 or 4 so far, and we're utilizing some different financing companies to help people with bad credit or no credit, get home ownership through a mortgage that can help their credit. And so sourcing those financing options for people has been interesting and pretty cool to be able to get people into a home that didn't think they could ever own their own home.
Maybe you could share, some of those companies of who you guys use, because I think, other listeners may find value in that.
Sure. So we're we're approved through 21st mortgage, like a lot of operators. The one that works well for clients that have low or no credit is PEP, so Performance Equity Partners. So they've been great to work with. They're very fast. We can get an approval and a closing within usually about 10 days or so. If the person, they have to make enough money, obviously, on their job, but they can get approval with pretty low credit. We're getting approved through Triad. Barron's is one that we've worked with in the Midwest. So I don't think they're in every state, but they're in a few there. Brett, do you have some others top of mind?
Yeah, I know. To Ryan's point, I think PEP has been our favorite so far, just because they're in most of the states we're in. They're not in every state. I think that they're willing to expand as long as they're scaled to where they're going. So if an operator is interested in bringing them in, I think it's still worth a conversation. One of the things I've liked about PEP is that they're more flexible on the home too. So obviously, these lenders care about the buyer, but also the home, and PEP just makes it a little easier with that. We're looking at a few other shadow lenders that are just a little bit more regional. So one of the banks we use quite a bit for our acquisitions in Springfield, Missouri, has expressed interest in lending on homes for us. So obviously Legacy too, we're using their financing program to do the acquisition of the homes.
Very nice. Yeah, thank you for sharing those. Appreciate that. Brett, let me ask you this one, and then we'll go and ask the same question to you, Ryan. What are the most important things that passive investors, we're talking LPs here, need to look out for when investing into mobile home parks?
Great questions. I think of a dozen different things here. So where to start? I would say finding someone that's got a lot of experience in what they're buying is really crucial, and just making sure that you really vet the operator. So making sure, every time, I'm surprised how many people we've had invest with us that aren't actually interested in meeting me. I reach out and I make sure we meet ahead of time. But there's a lot of people that are just comfortable, oh, hey, I've heard this is good. I heard you guys are great. I love meeting with investors. I think it's important to have conversations with the operators as an investor, to come in prepared and ask really hard questions of the operator of what's your plan? What's your experience? Have you done this part before? This really complicated thing you guys are trying to do here, have you actually done that before? And if not, how are you going to get the experience or the mentorship, or how are you going to make sure that you cover that gap that you've never done before? So I think don't be afraid to reach out and meet with several operators and make sure that you understand and trust and have a good idea of what they're going to be doing.
Yeah, that's the one word you said was mentorship, and reaching out. I think that's huge, reaching out to other more experienced operators, even if you don't know how to handle a certain scenario, have people you can reach out to that have done it before. Very nice. Ryan, what do you think are the most important things passive investors need to look out for when investing into mobile home parks?
I think just making sure that values align well with the operators that you're choosing to go with, and the principles. So as you know, there are some operators out there that their business model might be to go in and buy a community and raise rents extremely high, and maybe not an affordable rate for the current residents. We don't believe in that model. We find value of infilling and gradual rent increases, because we believe in taking care of the residents that live there and improving the communities that they live in, because they're going to become more sticky in that community and see the value of what they're paying us is going towards a better community. And that's not necessarily the case everywhere. So just making sure if that is your value, that you want to take care of affordable housing and support affordable housing, that you're finding people that do that as well. And then one piece that Brett and I were with Verivest, and so a third-party company that they put the sponsors through a due diligence process. They do ongoing portfolio monitoring as well. So we're verified through Verivest. So it just adds kind of an additional level of confidence for our investors that we've been background checked. They've looked through our own personal financials, and they can look at our business model as well. And every quarter we have to agree to adhere to a code of conduct that they have in place, just to ensure that we are taking care of the investors and the money that they trust us with.
Very cool. Yeah, thank you for sharing that.
Mm-hmm.
Okay, so Brett, I'll ask this one to you. What does the perfect mobile home park look like in your eyes, and why?
I would say at least 75 lots, preferably more, all city utilities. And I've already discussed why. All city utilities. I like having some vacancies, so we have some upside, like we talked about before. So probably 70% occupied, no more than that. In a big metro that we're already in. So we like Springfield, Missouri, Kansas City, Des Moines are kind of our big markets right now. And high cap rate, of course. So the big reasons for that, we've got a community as small as 21 pads, and we've got one, I think our largest one is 110 right now. And the 110, honestly, is just as easy / hard to manage as the 21 lot. I think I hear that all the time. People say that, and it's very true. Having city utilities is a big deal, especially if they're direct build, because it just takes a huge headache out. But I really like it when they're not direct build, because that's another upside. When we purchased our communities in Iowa, one of the reasons we liked it is there was a lot of infill, but the bigger upside and the quicker upside was the adding Metron meters and being able to sub-meter utilities very quickly. That was something that just took us a few months to get everything installed, and quick upside right there. We like to centralize our parks into kind of those pockets for scale purposes. We can use a lot of the same contractors, same managers, but also when we go to exit, we can exit all of those at once as kind of one package sale, which helps compress the cap rate, which obviously improves the intrinsic value of the overall portfolio versus the underlying assets, which is another big deal for us, obviously. So that's my perfect box. I have yet to see exactly that, though.
Yeah. Ryan, would you add or take away anything from Brett?
Say everything Brett said, and one that is in the Boise, Idaho market. So it's close to where we live.
We'd love to find something in Boise.
So we don't have to jump on a plane for a half day to get to our properties. Yeah.
Sure. Let me ask you, Ryan, tenant-owned homes or park-owned homes, which model do you guys prefer?
Definitely prefer the tenant-owned homes. It's just less time intensive to deal with. We have a number of parks that have a healthy percentage of park-owned homes that we're working hard on converting over to tenant-owned homes through those finance programs that we talked about, or at least a lease option to purchase LTO, something like that.
Cool. Awesome. Brett, this one I'll direct to you. What does the future of mobile home park investing look like? And how do you see mobile home parks fitting in with the direction the economy is going? A lot of people that I follow are saying we're heading into a recession. How do you think mobile home parks are going to weather the storm?
Yeah, I think they're going to be fantastic. I think, you hear a lot of times people say that mobile home parks are recession resistant. And I think the best example or explanation for that, or at least the simplest anyway, is that as people have income come down, or at least the gaps, right, they're going to move down in housing. And where mobile home parks are sort of that last niche for affordable housing, especially for home ownership, it's sort of that last safety net for people to come to. So I think it's a very safe asset class from that perspective. As far as interest rates going up, obviously, I think a lot of people are concerned about the interest rate climate right now with what the Fed's doing, or kind of the rumors of what the Fed may do over the next year or so. Something I think that people are quick to forget is that as interest rates go up, inflation goes up, which is not necessarily a good thing. But from a rent perspective, we have some rent growth with inflation as well. So from an investment perspective, I think that can help protect your asset, where you can lock in rates of today. And as the interest rates continue to go up, we have some of that rent buffer that we have from that inflation as well. So
a little bit of a hedge. Yeah.
Yeah, exactly.
Ryan, you have any comments on that at all?
Yeah, I think the consolidation of mobile home parks by bigger companies, funds that are purchasing them up, that'll continue. Obviously, it's not such a secret niche anymore, but there's still room. There's still plenty of them out there. I think there's only been about 10 or 15% of them bought up through syndications or funds or investors like us, right? So there's still a lot of opportunity out there for people to purchase and find them. We're still sourcing our mobile home parks through cold calling efforts and things like that. So there's still some deals out there to be found. So I think we're still excited about that.
Awesome. If any of our listeners would like to get a hold of you guys, what is the best way for them to do so?
I think the easiest way to remember, at least, is our website. It's just Suncrest Cap, for short for capital. So suncrestcap.com. We have quick contact info there for each of us, but our email addresses are just Brett, BRETT, at Suncrest Cap, and Ryan at suncrestcap.com. So we're both on Facebook and LinkedIn. So reach out any way that you're convenient. But again, I think the website's probably the easiest to remember.
Awesome. Well, thank you guys so much for coming on the show and sharing a little bit about Suncrest.
Absolutely. Thanks for having us, Kyle.
Thanks.
All right. That's it for today, folks. Thank you so much for tuning in.
Would you like to see mobile home park value add projects in progress? If so, follow us on Instagram at Passive MHP Investing for photos and awesome videos from our recent mobile home park acquisitions. Once again, that's at Passive MHP Investing on Instagram. See you there.